Hello, my name is Paul Wallace. I'm the Africa editor of The Banker magazine, and I'm here with Andrew Alli, who's the president and CEO of the Africa Finance Corporation. The AFC is a multilateral development institution based in Lagos, and it's one of Africa's largest development institutions. Andrew, thank you very much for joining us. I'd just like to start off by asking just how much there's been in the way of infrastructure investment in Africa in say, the last 5 years.
Paul, thank you very much. Unfortunately, I think that the amount of infrastructure investment ever, but certainly in the last 5 years, has been way too low. There are various different studies that have been done, but most come out with an infrastructure financing gap of something between 30 and 40 billion US dollars per annum. I think this can be sort of made more specific if you think of the fact that over the last 10 years there have probably been about, on average, 2 independent power projects deals which have closed each year in Africa. Now, when you compare that with the need in terms of power, for example, it really isn't moving the dial at all. And that's why AFC and other institutions are really trying to ramp up the level of infrastructure investment that's going on across the continent.
And why is it that you think there's been a lack of infrastructure investment? Is it simply that the capital needs are so huge that it's difficult to find the money, or are there other issues at play as well?
In our view, it's not really the money that's the issue. I think today we find that where a project is properly structured and deemed to be bankable, that there are sufficient sources of finance to get the project going. The real bottleneck is that there's a lack of sufficiently bankable projects for which people into which people can invest. So, for example, when you look at it, firstly, the governments often are not as quick to open up infrastructure projects to the private sector. And secondly, even when they do open them up or do want to open them up, there are quite a lot of hurdles that have to be crossed to get them to the point where they're really bankable and where the private sector is keen to invest. So it's not so much that there's a lack of, obviously, potential investment, but turning that potential investment into real projects that can be invested in is I think, where the main bottleneck lies.
When it comes to the AFC, in the last few years, where have you seen the greatest amount of activity? Where have you sort of put most of your balance sheet towards? Which countries and what types of projects?
Well, I think we've seen a lot of activity in the power sector. I think power is, again, if you were to take anything in infrastructure, power is the one where you can say that every single or virtually every single country in Africa has a power deficit and needs more investment in power. Power also is very intimately linked to economic growth, so it's very important. And we've seen power projects across the continent. We in AFC invested in a wind farm project in Cape Verde, which now provides about 20% of the country's power. We're working on a thermal power plant in Ghana, which is a 340 megawatt power plant that will provide something like 10% of Ghana's power once it's up and running. In Nigeria, we've invested in the power privatization process that happened last year. We supported three companies, 2 generation companies, and 1 was a distribution company. And then we're also looking at various power projects in East Africa, Kenya, Mozambique, and countries like that. So power is a major thing for AFC.
One thing that has got people quite excited recently is the power privatization program in Nigeria, and the government over the last couple of years has privatized quite a few distribution and generation companies. Are you confident, are you pretty optimistic that that privatization program is going to help the country boost its power supply significantly and help end its dire electricity shortages?
Yes, very much so. I think we're already starting to see that. So some of the people who bought the privatized assets have been able to double the production capacity of those assets, even in the 5 months or 6 months since I've taken them over. I think it's important to look at the Nigerian power reform, and it's not just privatization, but there's a whole sector reform behind it, as being actually one of the most ambitious sector reforms that has been done anywhere in the world in the last decade. You know, it's sort of on a line with how the UK realigned its own power sector back in the 1980s. And so it's very ambitious and very complex. And therefore, you know, not every aspect of it will work as quickly or as smoothly as people would like. There will be hiccups and bumps along the way. But I think broadly speaking, it's heading in the right direction. And I expect that there will be significant improvements in the power supply situation in the coming years. However, it needs to be noted that it takes about 3 years to build a new generating plant. So, you know, one needs to be realistic about how quickly visible changes will also come into the sector.
And just lastly, turning back to the AFC itself, there's obviously a lot of demand, increasing demand for your funding, and you quite recently got an international credit rating. What are your plans in the near term for raising capital? Do you have do you have plans to perhaps bring in new shareholders or perhaps tap international debt markets?
As of today, we actually have a very high capital adequacy ratio. So we're not really looking for equity capital, although we see that coming down the line as we continue with our ambitious growth programs. We do have a plan to essentially double our balance sheet over the next 3 to 5 years. So we'll be looking to tap into various forms of leverage for our balance sheet. That would include the international capital markets, so Eurobond issues. It will also include doing things that we're already doing, like receiving bilateral funding from other DFIs, doing bilateral deals with commercial banks, and also doing syndicated facilities like one we just closed in December last year, which was a $250 million international syndicated facility. We're very keen to keep our sources of financing well diversified, and that's why we continue to look at different parts of the market to finance different pockets of our available liquidity.